Good afternoon. Welcome to OptionsTender. We're taking a look at SPX as usual until we get a big enough reversal off of here for all the new people joining and viewing this channel. So first of all, thank you for all the support. The Discord comes with any of the... We're doing this intraday. Sorry, we're doing this intraday about 12:40 p.m. Eastern Standard Time. If you want to get these intraday, consider becoming a YouTube supporter and or individual analysis. It's 99 cents or $4.99. So each of them come with the Discord. We like to set up trade alerts in the Discord and all sorts of happiness in there. So we're going to do something a little bit different today. We're going to, I have a few screens that I view and what I look at on one of my screens, this Elliot Oscillator, it helps me with my counts and catching some of those turns, mostly on the higher time frames, but it works on the lower as well. And so I want to show you from this perspective. And also I have the volume graph integrated in the charts as well. SPY is the cash charts. It doesn't have volume on here. So we're going to, you'll see it when we get to SPY. But I like to start off on this SPX here. So let's go ahead and jump in. And by the way, if you're new here, go down to that bottom right-hand corner, hit that OptionsTender logo and subscribe. And don't forget to like the video. We have the 1929 top here. We have the 2000 top here. And we have the 24 top here. Well, unless the top happens on January, then we'll rephrase that. But I think we're there, and we'll see how we reverse off of it in the near term. So, and these are very precise. I went and zoomed in down there. So the other thing, you also see this turquoise line here. That also gives me an idea of each trend, very jagged. They call it the zigzag high-low. So you can check that out. Again, I have this on my second screen. The Elliot Oscillator. That's the one that's down here. Okay, so how do we interpret this? Right now, we're looking at making a new high here. So what that tells me is that we're not getting any negative divergence here. It means after a correction, there could be a deep, deep correction, but afterwards, we're going to make new highs. So with the thought that this might be our scenario in mind, that we have more of a stretched out, even though it's going to be larger, it's a larger degree correction, but it could be something like that to where we have our high or have our high here, we correct, make a new high, and actually get a lower low, higher high, lower low. Okay, so that's not out of the question. And if we make those higher highs, I do suspect we start to get negative divergence on this. So we'll have to keep an eye on that. But at this point, I think we're peaking, and that's important in itself. We don't have to have negative divergence, just like this top here. We don't have to have negative divergence to peak. All right, and then we got a correction all the way down to the bull bear line here. That's a zero line, and so that was a good indicator that that low was in, and that we can continue higher from that point. So the correction went all the way down to the zero. In this time frame, in 2000, we went into a bearish territory. All right, came out of it and did the same thing, went even deeper that time, making a lower low. Okay, and there was divergence in this. We made a higher low actually right here, and made divergence here in this. I won't spend too much time on each chart after that, but I just want to get you the idea of what this says, okay? All right, so let's jump over to SPY. All right, SPY in the monthly time frame. We have our 2007 top, 2021 top, and in confluence right now. So we're in this confluence of tops here from a trend lines here. So we got to keep an eye on that we were probably going to get some sort of reversal off of here. And here's the volume. The volume is waning. Very, very low volume. Of course, when you're having crashes, you have this massive amount of volume, and it's very typical in a bull market for volume to descend, but not to fall off a cliff necessarily, okay? We're running out of buyers here. Okay, so what does the Elliot Oscillator say? We're making a new peak here. So in that opinion, we're looking at making a correction, possibly all the way down to the 0 line or more, and looking to make new highs. We need a divergence here for a wave 4 into 5 kind of thing. So that's just giving us information. So do we come back and test maybe the trend line? Do we test? There's all sorts of things. Is this a new 1, 2 setup, and then we go further? That's a possibility where we get a divergence from there. Or are we simply ending off with a 1, 2, 1, 2, and we just need to get a wave 3 out of the way, 4, 5, and get a new high there. There's a lot to interpret in the shorter terms, but this gives us an idea that maybe this run before catching new lows is not over. Maybe this is a 1, 2, 3, and we get a 4 and a 5. You know, there's all sorts of ways we can look at that. So we just have to look for clues. But the biggest thing right now is we're at a point where we should turn. Okay, so looking on the weekly time frame, let's see if this gives us some different information. On the weekly, again, you see our traditional technical analysis. We're at the tops there. We're at the trend lines. Are we going to reverse off of it? Here on the weekly is what we're looking for. Very similar to here. You get these negative divergences from wave 3s into wave 5s. Okay? That clearly wasn't a negative divergence. That gave us the clue there. We peaked. And that gave us the clue that price still is going to get higher. Maybe not necessarily a higher high like this, which clearly it did. But if it would have made a lower high at when price, for example, you had the high here, you had a higher high here, it started to make a lower high. So you could have been thrown off at this point until it started to exceed the new highs. Okay? So that's one thing you got to be careful about. But this tells us right here we're getting into wave 3s, into a wave 5. And that was on a lower scale. But now, again, we're getting this kind of 3 peak action, a 3 to a 5. And then on a higher degree, wave 3 to a wave 5, getting the negative divergence there as well. Okay, so we're looking for a turn. Natural spot for us to go to would be the breakout point, and that's about 560, 565 area. So we're looking for that to test. We have this trend line on here so far. We'll see if it holds. Don't put too much weight into a trend line that only has 2 touches at that point, because this also could be, you could have on the daily time frame, you could have the bodies that you can trend lines. They just have to validate each other. Maybe it's more like that, where you have more touches and it makes sense. Okay. For now, we'll leave it here just in case. But support and resistance on a vertical look, they're much more important to me. All right. And so again, volume just dropping. We had a volume drop here before the turn. volume falling off a cliff now. Just dismal volume. So on a, where this became very important, I'll point out on the weekly Elliott wave Fibonacci look here. It's going a little deeper. This is where this came from. This is why this is a good breakout zone. We had the 162 and the 127 retracement. Those are major targets for us from this correction in 21 into 22. And so price rejected off there hard, but held on to the former resistance. Got back up there, got above, and that's why price is losing momentum, but it's still a breakout. And now we're looking for a drop from this point. Do we get an inside week? Very possible. Possible we peaked here and we're getting an inside week. Going into tomorrow, we might have a drop from there. And this could end up being an engulfing candle, a big red candle from there too. We don't know until price tells us. But our next time and price relationship is going to be the end of December. And I think we're going to drop into that. But we'll see where price is coming into that that date. So price could be up here. If price gets up here at 561.48 at 12.29, then I'll look for a bounce. I think it would be a lower high, but we can't determine that until. But I do think from this Elliot Oscillator that we're done with this move here. So I do think it'll be a lower high, and we'll see a bigger correction. Going to the daily. On the daily, a look at the traditional technical analysis. We have the bearish rising wedge pattern. The lines are a little bit more dim here, but that's an ending diagonal that we have this playing out as. Ending diagonals, typically you want to see a test of the bottom of that that diagonal, and the point of control is here, but I would call it a zone down to this 390 where there's a lot of volume here. There's another volume node there. Okay, so the first test would be this ending diagonal. All right. And I'm not sure about the actual rule about having, I did read that you can't have an ending diagonal within an ending diagonal kind of thing. So you can count these in different ways, but I'm not an Elliotician. I'm not looking at these exact, you can count them as 5. You can count them as 5 waves. You can count them as 3 waves. It's so subjective. I'm just looking at for these structures to look complete. Okay, so here's the bearish rising wedge here. We're rejecting off of the wedge that's drawn from this point, from this high to this high so far. Now, we do have some unfinished business here at the 610. It's still possible. We're probably going to get an inside day here. If price does go higher again, no problem. We're going to short it again. That's another short setup. This was a short setup. Whether it was a larger breakdown is a whole nother story. But this is a short setup, a beautiful one. This was back into resistance, and this was. So it, again. So our natural spot here for us would be to at least test the trend line, which would be with this breakout here. So just in the near term, the 600 would be a good spot. And I'll show you how that might look in the 65. And the trading day is not over yet, but check this out. This volume is dismal. We're getting inside day. Nothing's happening. So from an Elliott wave point of view, with this top here, going into this top here, it appears we have a wave 4 into a wave 5. And that happens on the opposite side too. So don't just think this is just on the bullish side. When the bears turn the opposite way, you'll see 4 into 5, or sometimes A into C for corrections. Now, if you're new, this arrow was just giving us a point of view if the market fell out of bed like 2000, like the 2000 top, and it fell for 23 days. That's 16 trading days, with the weekends. Fell 14%, and that's what it would look like. We have a top here and down here, so clearly that's not happening at this point. But if some sort of catalyst, black swan, whatever the headline says it is, that's what would occur. And it's not a typical move, so I'm not looking for this, but I want to keep that in mind. All right, let's change the boards up here. So this is what our ending diagonal, even if this is not an actual ending diagonal right here, and this one actually is, this is how I would count it. 3-wave move up for 1, 2, and then 3, 4, and then you get a 3-wave move up here for a 5. So you could count this as an A, B, 1, 2, 3, 4, 5. Something like that. Okay? Where it just happens to be losing momentum and getting really tight in price action and forming a bearish rising wedge there. But this would be our ending diagonal of a larger degree move coming from the 2021 to 2022. All right, and so that's how we're counting this. And again, this is probably the first point that we're really going to get to at the 560, first big point. Okay, we break down from there and much lower at that point. But when we get there, we'll talk about it. Okay, and from our time price relationship board here, we don't really have anything. We have something on Monday. Let's see, the 13th, 15th. So this is over the weekend, the time relationship there. And then we have something in the 19th, 26th, and so on, even down to January 5th. So there's a good cluster there. We'll be really watching that one. So not a whole lot to base off of right now. But when price gets into a certain spot, as these time frames come into action, we'll determine what we think is going to happen at that point. We'll look at a lot of our oscillators, indicators, structure, all those things when we get into price and time relationship and determine what we think price is going to do next. Guess what price is going to do next, the probability of what price is going to do next. I know there's I glance at the comments on the YouTube channel, and I know a lot of people don't understand. They're looking for just outright predictions while they're from analysts. So I'm considered an analyst, but I'm a trader as well. And so people are looking for outright predictions of where price is moving at every time. And that's not really how it works. We look for the best probability of trading and making money. So as price gets oversold, you have all these different divergences. You have different ways to look at things. The probability, in my opinion, is to the downside. And I love this zigzag, how, this is considered one move in itself. And this move, I believe, is turning. And this move here, one move, even though you see that there's more moves within it, a 3-wave move there, that's considered one move in itself. And I really like how that can help guide. Okay, let's go down to the 65. And we'll just jump around to a couple different things, and then we'll end it there. So there's a bearish rising wedge there. So far from this peak to the top there is rejecting. And if price holds right here, it's possible that we get up to that 610 area. And I'll show why 610 is important. But broke down from this bearish rising wedge so far, and this could be a lower high. We can draw a downtrend at this point to see if we get a lower high. So from this peak to this peak, if we start to break above there, we're likely to get that 610 and to drop from that point, just making a new divergence there. Now on the Elliot Oscillator, we had a peak here from the election. And so that tells us, really, well, on the small scale, we had a negative divergence there. So that was saying, hey, this move is done from whatever wave 4 to 5 here. And so you can draw a little one there. So price corrected at that point, and then we made new highs. So you can almost just double these and move them over. And so we started to make new highs, and divergence continued to play out. And so on this time frame, we're looking at wave 4, just how I have it labeled, and I'll show you just a second. We have wave 4, the top here, into wave 5, and that's what I have marked on my next page here. So let's go over to there. I know it's busy. There's a lot of stuff happening here. We'll dig in to just this last move so far from a wave. This side we had this counted leading diagonal for a 1-2, and then wave 3, which is where we get our top here, correct into wave 4, and then we had an extended wave 5. Notice that momentum was accelerating at there. We extended wave 5, and that's where we get our peaks here to end this move. We got the correction. It looks, we can count this as a 5-wave move down for an impulse. So we're looking for a lower high at this point. But 610 is the next move up there. 610 is the 162% retracement from this correction right here, from wave 3 into 4. All right, so then we'd have to change our outlook here, and we'd consider this. It'd probably make another bearish divergence. I don't think it makes sense at that point, but maybe we get a new high, and then we have to create another little divergence over here. Okay, so then you'd have to change this into a 1-2. Then we got a wave 3, and then somehow get a deep wave 4 into a 50% retracement from this wave 1 to 2. And I'm just not seeing it. So maybe that wouldn't make sense to me. So even if this is still a 1-2 and then wave 3 is all the way at the top, let's kind of measure that out. These are the things that I have to do each and every day to see if the moves make sense. So if we get the bottom of wave 3 all the way to the top of wave 3, then in that case, we only corrected in between, so still could technically be a wave 4 at that point, and then this would have to be a 1-2, and we get a wave 3 here. That means we're going further than 610 though, unless this momentum really starts to wane, and you see wave 3 is shorter than wave 1, and then wave 5 is shorter than wave 3. So again, it's looking kind of funky. And we didn't touch really anything, and not that it had to, but you have the 23 that it broke down into this 382 zone. I'll tell you, it's a lot more. It happens a lot more where you touch one or react off of one of the fibs, not break down from it and gap above it. So it just doesn't look right, but it doesn't mean it's wrong. Okay. So I still think this is the dominant count. I think this move is done. And then we bounced, gapped up, and we're rejecting off of that 786 retracement right here. And after this gap down today, all we're doing is getting a 1-2 setup in here. So this is a 1-2 setup. And we're actually rejecting off of that 62% retracement. point here. And if you even go on a lower degree, see if we can dig in here just a little bit further. I don't really like to go down to like the 15-minute and things like that when you're doing all these analysis, but here and here, so the bottom of this move, top to bottom of this move, we retrace back to the 62% retracement. So that's a 1-2 and then a 1-2, 1-2 there. So tomorrow could be quite bearish if it wanted to, but in a sense, we have to break down from what looks like kind of another, let's call it triangle at this point. So if that top to this top, we'll see if we get above it. Maybe we retrace deeper. Have the gap down, so the gap could be holding here so far, and then we'll see if we break these lows. But going into next week, if we stay underneath this 607, that would be the first point where I think, all right, maybe we're making a higher correction. But you know, usually this was a deep correction to 786. Usually you don't go 786, 786. You start to get a little bit deeper. And so that's this after this move, 786 retracement, and then a 62% retracement, getting a little weaker. I think it's if we get above here, then we have to start thinking about new highs. Not that I'm going to play it from the call side, but if we break this high, for sure, we're going to 610, in my opinion. And again, it's just not enough room. I'm not going to scalp a 1-point move at that point. So we'll just see where price goes. It seems to be in an equilibrium with no volume. And in my opinion, this goes lower. If we gap down, you know, that's more likely of a situation, because I think people are buying this. I think it's more likely that we gap down tomorrow. And if we gap underneath this gap or anywhere, you know, leave a gap open and gap under, then you have an island gap reversal in play. So we'll see what happens going into tomorrow. And let's just take a look at QQQ. Has a setup in itself on the daily time frame. So we'll just peek at that and then look at the VIX. So the Qs had this nice bearish rising wedge, and we're rejecting off of the top of that wedge, and we're getting it inside. It's called a harami. So it could be obviously a pause candle and continuation to the upside. But when you're at resistance, I think it's more likely that this is a harami bear reversal. Okay. So we'll look at that to see if we get our reversal going into tomorrow, which I think is highly likely. And then we'll go from there. Other than that, VIX. VIX here, showing that the move is over, at least a move. It doesn't have to be the move, but a move is over from this low to the lower low, but a higher low in price, meaning if this and ABC are going 4 to 5, doesn't matter which one, is the positive divergence on the daily time frame. We're just kind of holding around the options expected move, but I think we're making a higher low at this point. And with this, this could be an indecision candle, and that could be a reversal candle for us to move higher going into next week. And of course, SMH, this is the overall indicator for me, telling us what direction we're going to be in. You know, this is just week on week on week. So bear flag, backtest, breakdown, and we're just waiting for the rest of the market to follow at this point. And I would call it underneath this 238. I would think that's kind of the nail in the coffin at that point. And I think price breaks down. I don't think this trend line is any good. Will be any good at that point, because we have the lower high set up here, and we should trend much lower. I think the next point here would be about 213 for us to get any sort of bounce. Okay, that's all I got for you. Thanks for watching.